All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 17th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 434 that we are doing during it's a special episode during the larger Analyze Your Trade event on Timing Research. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for uh, Daniel Sinnig of Trading Indicators to be here, as well as Michael
Hey guys.
Filighera. Hey, Daniel. As well as Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com. And back to moderate is the Option Professor of OptionProfessor.com. So I'm going to go ahead and turn it over to him.
Okay, thank you, David, and welcome everybody. I think some of you have been carried over from the last broadcast, but in case you haven't, I'd like everybody to introduce themselves before we get started. Daniel from Trading Indicators. Daniel, a little background on yourself, and then, of course, just a quick idea of what we're doing at Trading Indicators.
Yeah, great. Let me quickly actually for that put on my slide, which I prepared for that purpose. There we go. Hey, that's me. Hey guys. So yeah, I'm Daniel. And if you can guess, and if you stayed on the previous session, you would guess very easily. I'm of German heritage, so to say. Born and raised back in Germany, but have been living in beautiful Montreal for the last almost 25 years. And I came here for a girl, but I really got stuck in the city because I had a great university, and my career objective at the time was to become a professor in software engineering. And so I did my master's, my PhD, and my postdoc at the university here with the objective of becoming with a career in academia. But I was always fascinated by the world of finance and trading. So I started trading on the site. And, as you start off, you make mistakes, you overtrade, revenge trade, you take too much risk, and so did I. And after donating quite a bit of money to the market, I came to the realization that I need help. And for me, as a software engineer needing help, man, I need better tools which help me make better trading decisions. So I started programming because I was a software engineer. And once I realized, hey, these tools are actually helping me, I thought, maybe they're going to help others as well. This is really how the story behind TradingIndicators.com, our online store, started. And most of the tools, actually all of them in our store, they have been primarily programmed for our own purposes. That's been now more than almost 10 years ago since we've started Trading Indicators. It's been quite a journey. We have clients all over the world, in the US, in Europe, and in Asia, Australia. And it's been a great journey, a very rewarding journey. And yeah, that's what we do. And today we're going to look at some of the indicators that we use on a day-to-day basis. So that's me.
Sounds good. Sounds good. Michael Filighera, a quick background on yourself and what's going on over at your outfit.
Sure. Good afternoon, good morning, good evening. My name is Michael Filighera. I am with TradersHelpingTraders.com and LogicalSignals.com. And I have been trading in the market since 1979. I started as an options market maker here in San Francisco. I've traded here in the London traded options market, the European Options Exchange in Amsterdam, and also on the German DTB, where I got my first introduction into all electronic trading. I returned back to the United States in 1997 and continued to trade as a market maker on the PCX. And then when everything started to go electronic, including all the exchanges and the routing of orders, things got a little bit too slow, and I chose to just go to my home, open up my office, and continue to trade there instead of on a floor. I became a day trader in 2013, and then I started to participate with David on Crowd Forecast News and other shows that he has produced in 2014. So I am very well versed in Elliott Wave. I learned Elliott in 1989. I learned from Robert Prechter and Dan Ascani. And so I've been using that. But now what's happening is I'm actually expanding my interpretation and my understanding due to the total takeover, as it should, of number one, artificial intelligence, and also algorithmic trading. It has put some changes into place that need to just be noted. But in any case, I continue to trade, and I continue to also post daily updates on YouTube under Traders Helping Traders. But please be careful, because someone else has hacked that name. So you need to use Traders Helping Traders and then my name.
Okay, sounds good to me. We are going to start out with Daniel giving us some different ideas, and then Michael, when we get over to you, then you could change your screen over to yours. How's that sound?
Sounds good to me.
Okay, so Daniel, give us a little bit of an idea of some of the things you're seeing right now, maybe on the major indexes, because today, obviously, we're getting another big move. Like I say, Evercore has raised their thing up to 6,000 on the S&P, and people are looking for an avalanche of money market to come in here. So it's getting a little bit hot out there, but it also, is getting pretty firm with the prices. So what do you see?
Yeah, exactly. So pretty much the same outlook. What I noticed, and I actually called this one out in the previous session, is that price was approaching this resistance zone up here. As soon as I mentioned, when price approaches resistance, that we may see a bit of a bounce back. But in this case, it just hammered through. And this coincided with a momentum shift from bearish. This is all short term. This is the 5-minute chart. So to eventually bullish. And, two things happening. We did have a zone break here, price hammered through, and now we see a follow through to the upside. And especially, I believe for today, the outlook is definitely bullish. We may see a bit of a retracement from a very short-term point of view back to this broken resistance zone, which now will act as support. If we see it, I would not do anything right now, but if we see a bit of a retracement, it could be a great opportunity to re-enter in the bullish direction as price approaches this zone with a stop loss just below here in the anticipation that price will move higher. So that's, short-term, definitely a bullish outlook for today.
Yeah, and it's nice to buy the pullbacks so that at least you're getting a little bit of a better price and some of the froth comes off of it. Because we had a couple of pullbacks here today, and they were obviously good buying opportunities. Pull back towards 54.90 and then 5500, 5510, and then now we've had a acceleration up towards 55.35. Also interesting is that the June contracts expire on Friday, and there's still a whole lot of people still in there. So obviously a rollovering effect may be interesting as we go into the end of the week. We have off on Wednesday for the holiday, so Thursday and Friday of this week could be pretty active. With regards to any specific stocks that you were kind of looking at that you might want to share?
Yeah, and I'm going to go to a more long-term perspective. This is just the day trading time frame here for the futures. If I go to our own dashboard, which we use for screening for stocks, I found a couple of very interesting setups. And one is, and this looks a bit messy now, but let me clean it up a little bit. So let me quickly just filter down. This is our own scanner. Some of the filtering that I do on a day-to-day basis when it comes more from a stock or options perspective. So now I focus on things that are optionable. It's going to hide quickly some of the stuff that we see here, so it's a bit cleaner. There we go. Okay, perfect. Now, one setup I really like when it comes to options or stock trading is what we call the long bounce setup, where price has, move towards a resistance zone. Let me just quickly find a nice one here. Give me 1 second. There we go. Okay. So price has moved towards the resistance zone. For example, here, Pepsi, here we can see it here. Price just recently moved down. We can, if you expand a little bit, into this. It's just a bit too messy. Give me 1 second. I'm just going to hide some of these labels so we can see it a bit clearer. There we go. Okay. Perfect. So price moved down towards this resistance zone here. We can see it here. But momentum is bullish, even though we had this little drawdown here. So this is an expensive stock for maybe perhaps not perfect for using options because it might be expensive, but we may see a bounce to the high side. And I like these opportunities that price just retraced towards a significant level, in this case, a support level, which can be good entry opportunities. But one thing I really like, I search for this all the time, is where, just find this one, where price has been very bullish for a long time. We can see it here in our scanner. For example, here with ET Energy Transfer, this stock has been bullish in terms of MRH for 776 trading days with a positive R score. This is our short-term score. So, and we have a long bound setup. So if we go here to ET, we can see this stock has been moving up forever, since years, moving up all the time. But now we did see a nice retracement here towards a support zone. And you know, this is a very bullish stock. Retracements are your best friends when it comes to trend trading. So I really like this setup. It's relatively cheap in terms of stock
You're
price.
talking about from the long side, right?
Yeah, definitely. So now
Yeah,
we
because the crude prices have turned up and they're almost pushing 80 now.
Yep.
So there is a bit of a turn in the actual product, and some of these shares I think are also turning to the upside. So this might be very interesting here.
I like this setup a lot. This is a super bullish stock. As you see here, 776 days with bullish momentum. And we're still bullish, and we're just seeing a retracement here. So this could be a nice opportunity to enter at a good price for this symbol.
Yeah, that's interesting.
Yeah.
How about if we tried something with regards to JP Morgan, because that had a nice pullback and now that's turning up. I was wondering if the bounce or some other search scanner could help us there.
Yeah, GPM, it's coming up. So here, let's not even look at the chart. We can see directly in our scanner here, this stock has also been bullish since 327 days for a long time. That's almost 2 years. These are trading days, not normal days. So trading days 327 with short-term bullish trend. Yet we can see a bit of a retracement, but to me, this is once again a healthy pullback in an uptrend. You can see it here, price moved back here since the all-time high at 206 or whatever that is, a bit down to 193, and we see a bit of a pullback. And yes, this could be an interesting area as well to consider long entries for this stock, even though there's no nearby support zone. We're trading the next zone will be at 179. We can see it here, this little line. We're somewhat right in the middle between support and resistance, but yeah, potentially another long opportunity for the stock.
And a gaming stock over in Asia, Las Vegas Sands, LVS, that had a drop, and I was wondering if it had any support, because it does look.
Look at this. We are right at the support zone. We actually just if you look at here, this is our support level. We're just at this level here. A bit below now. This is why it doesn't show up as a long bounce setup, because we are actually below this support and just a bit. But yeah, it's been short-term bearish. You can see it here on this indicator. The heat map is all mostly all red, especially on the long-term trends. Yet overall, from a long-term perspective, we've been with bullish momentum since again 374 trading days. If I were just to hide this, the other one, hide this, our levels indicator, just look at this stock in general, we can see, where is it? That, ever since here, since December 2022, we did have bullish momentum, of course, a huge pullback since then, but technically, this is still an uptrend from a long-term perspective. So our indicator has not changed. Our long-term perspective has not changed on this stock, but of course we do see a good pullback. But you know what, we are definitely at an important level here just by looking at these two swing lows, 3 swing lows coming in. This could be another swing low. We may see another pull higher for the stock.
Advanced Micro Devices has been under some pressure, but it looks like it might be near some support. Does your
AMD, you mean? Yep,
AMD.
There we go. Of course, all these tech stocks, unlike Intel, AMD has been doing very well. I guess they have jumped on the AI bandwagon a bit earlier than Intel. We definitely do see a nice bullish momentum since about a year ago, and then price has surged. But now we did see the pullback. There are no nearby levels as far as our indicator is concerned, which draws levels from it's actually hidden, that's why. Okay, let me now see, zooming in a little bit. We are just looking here. We are just resistance all the way up here, support being here. So we are near a support zone. We can see price bounced off twice this support level. But now we are, yeah, somewhat in no man's land, but I do believe this is a very bullish stock, especially since, yeah, the big move since March or May last year. Yeah.
One thing that we identified about a week or so ago when we were talking was Palantir, and it's starting to get legs again. PLTR.
All right. Yeah, here we have a nice long bounce setup. Let's see what we have here. Price.
No, PLTR.
Oops. Hey, almost got excited there to see a good setup.
PLTR.
Yes.
Yeah, because we had discussed it at 21.
Yeah.
So far, so good, huh?
Yeah, look at this beautiful. Actually, this is
Yeah.
we did have support right here at this level. Price bounced off a couple of times beautifully off this level. We traced back, and now well, once again, somewhat in the middle between support and resistance for the stock. But yeah, definitely, if I switch on our momentum indicator, I would bet that we do have, yeah, we are bullish long term since 239 trading days on this indicator. So yeah.
And just an industrial metal, Freeport-McMoRan, FCX, that has been under pressure, but is the pullback indicating it could be near over?
Yeah, let's have a look. Oh, that's the wrong one. We just click on it. There we go. Ah, that's actually one of my favorite setups. And let me explain to you why, guys. We did have our zone break here back in beginning of April, April 1st. Oh, nice April Fool's joke price. Bounced, well, went above this resistance level, which is now acting as support. We did see it here. Let me just hide this so it's a bit clear. Price retraced once back to this broken resistance level, which acted as support. A nice follow through. Now, once again, it's back near resistance. One of my favorite setups, because this is our retracement setup. You would enter just around this level of broken resistance with your stop loss just a bit below, if you want to trade this outright with the stocks, in the anticipation that price is likely to move higher, especially since we have bullish momentum since 114 trading days, and still a bullish short-term score on that stock. So that could be an interesting setup now, especially after this retracement and price being favorable right now. Yeah.
You know, some of the car companies are starting to get a bid. General Motors has a very low PE ratio, GM.
Yeah.
And it is.
Where do we have it? We have to somehow have to type it in. There's too many.
Yeah.
There we go. All right, GM. Yeah, just by looking at this once again, bullish momentum since 2 months, give or take, and a good short-term score. Let's see. Yeah, similar situation here. We did see our break above resistance and an immediate pullback towards this broken zone. But given the fact that this is a bullish stock, this could be once again a nice opportunity to enter long into this stock, especially since we are once again exactly at the broken resistance level. It now acting as support and potentially preventing price going further lower, but instead we're going to see a bounce towards the upside.
You know, an inexpensive stock that's overseas, you know, we have Uber and Lyft here, but in China, they've got a ride sharing company called DiDi. And I was wondering if you're seeing anything.
Actually, I don't have to for this one. Let me just go to.
Or DIY, possibly. Sometimes they go DIY.
Let's just look it up here. Not this one. All right. Oh boy. Okay, so let's look at this from a long-term perspective. So I'm gonna put the hourly chart on here on TradingView, along with our liquidity IQ indicators configured for the let's say daily time frame. So get the levels from the daily. Yet we have, yeah. Okay, nice zone break here back in April this year. Good follow through. Price then stopped, was rejected twice at this resistance level, along with a lot of liquidity captures. Ever since we bounced off this level, now we also powered through this new support level here, but price has since retraced back to broken support, which now may act as resistance. So a bit of the opposite case as we've seen before. It is not unlikely that price will continue its bearish move, perhaps a bit one more leg higher into this area of broken support, which will now act as resistance, and we may see downwards move here of the stock, especially if bearish momentum.
Why don't we look at a couple of the big ones like NVIDIA, NVDA?
Everybody's talking about it, huh?
Oh yeah. And
Let's
there's
see.
two other ones that are in concert with it that seem to be doing some. But is this thing got
That's
any
not
sign
NVIDIA.
of running out of gas? NVDA, yeah.
Oh, they had a stock split.
Yeah,
I
that is
guess that,
stock split,
yeah,
yeah.
okay. I was just wondering, why is it so cheap?
That's
Yeah.
how you get them cheap.
Yeah, I mean, there's as far as my trading approach is concerned, yeah, there's nothing I would do with NVIDIA. I mean, it's been on a skyrocketing journey. We had the zone break here back in May 23, I guess, at the earnings. Yeah, we broke that zone ever since. Price has been moving higher. Now we are trading miles away from this broken resistance zone. I don't see a retracement towards this level, but whether I want to chase this trend at this point or not, that's perhaps for others to answer. It is not one of my setups. To me, it's it's just too far off any recent technical levels, especially from a long-term perspective, at least.
You know, there's a couple of housing stocks coming out with earnings. One is Lennar, L-E-N, and L-E-N, Lennar, L-E-N.
Yeah, let's have a
And
look.
the other one is KBH.
Oh, that's a messy stock just by looking at this initial price action. But we do see that price has respected actually quite nicely our levels here. So we had this bounce towards the support. Price went up once again. Price went up. Now we are somewhat in the middle between support and resistance. Overall momentum is bearish. I don't think it is unlikely that price will once again test this support zone here on 150. If you zoom out a bit further, where are we coming from? I mean, very long term, we are somewhat range bound. Price being oscillating from a very long term perspective between resistance and support, almost to the T. Now, once again, we bounced off this level.
The 150 neighborhood.
Yeah. I'm not sure. Again, this is not a stock I would consider taking any educated guess on, especially if earnings just around the corner, I guess.
Yeah, with the big things.
Yeah.
And in that weight loss with the you know, the drug for diabetes as well. This company,
what's it called again? Yeah.
Yeah, that was I don't know. There's a couple of letters to it, but the company, I think it was called. Let me see.
All the
It was
Ozempics.
called Structure Therapeutics. If that can come up, Structure.
Yeah, this
there you
one,
go.
GPC or all right. Nice. Wow.
Yeah,
Okay,
with the
so
pullback, that's the key. You know, is it near an area where you could take a bite or?
I mean, if price were to retrace a bit further towards this broken zone here, we had this huge outbreak here. I don't know what happened on that day. Maybe they got one of their
No,
medications
they announced
approved.
that they have a drug that has efficacy in the same ballpark with Lilly. So once
Got
you
it.
say you're in the same ballpark with Lilly, you're going to get some buying.
Yeah. Huge breakout here. I didn't see any gap. I guess that's just happened not overnight. Price went up, rocketed through this zone of resistance back then. Now we do see a bit of a downside pressure ever since. We may see this. We may see price retrace back to this broken level, perhaps. With this normalization process going on. And if we do, it is not unlikely that price will bounce off once again this broken level, which acts as support towards the upside. Although we do have, as of, when is it? Friday, around noon, bearish momentum on this hourly chart of Structure Therapeutics.
With regards to Bitcoin, to me, there seems to be a little bit of a blow off above 73,000. And I'm noticing Grayscale, GBTC, kind of had a double top around 65. I'm wondering, is the Bitcoin,
we looked at Bitcoin earlier in the prior session. Yeah, definitely. Just by looking at momentum, this is perhaps just without all these levels on it. We do see on this hourly chart at least that, oops, I disabled the wrong indicator. Yeah, that we did have on this hourly chart bearish momentum since almost 1.5 weeks ago, since Friday, the week before, not last week, the one before that, bearish momentum, and price has been dropping ever since, now approaching this level of support. If we switch back our liquidity IQ indicator, we do see that actually we did break support. We still have bearish momentum. We broke support here. Price is now retracing back to this broken support zone. And it is not unlikely that this will now act as resistance and drop, preventing price from moving higher. Instead, price will drop even further with Bitcoin.
Can you look at a couple of commodities, like the price of gold and the price of crude oil?
Yeah, from a long-term perspective, or just
Just a general perspective, yeah.
Okay. Okay, CL here. Long-term, this is on
Picking
the
up some steam there.
yeah. I mean, we still have rooms to go towards this. Well, we do have resistance at 80.72.
Yeah.
So I definitely find it but quite likely that price may go to this level, even though we are in an intermittent resistance area right now, right at this level. Let me just quickly go, because we had this trade on during our prior session from a day trading point of view. Let me have a quick look. Give me 1 second. And I don't want to hog the show here, so maybe we can
I'm
also
going to be
have...
switching over in
Okay.
about 3 minutes.
Okay, perfect. I was just feeling shy here.
Yeah.
Okay, perfect. All right. So
Bouncing back and forth,
Yeah. So let me just quickly see once this is reprinted. Yeah. I mean, price definitely did see some resistance. This is from a very short-term point of view on the 10-minute chart. Price approached this area of resistance. If you zoom out a little bit, we can see that it bounced off once, and this is exactly what we saw prior here off this level with a nice liquidity capture event. Then price retraced back up. Now it's broken actually above this resistance level. When we see like in the next, perhaps we can revisit before the show closes. I believe price will go up a bit higher, perhaps to 79, and then we may see a retracement back to this broken zone. This is a pattern we see frequently with oil, especially. Price breaks the level, goes up a little bit initially. Don't get overexcited. We're gonna see a retracement, and then I believe this could be a nice opportunity to enter into this trade, especially if momentum stays bullish on the short-term perspective for MCL.
How about we close out with the gold?
Yeah. MGC, and it's gonna look on this on the micros and the minis, I believe. So here, yeah, actually smack down the middle, in between a no man's land between support and resistance, with bearish momentum recently. So I do see it a bit more bearish than bullish. Yet I would also from a day trading perspective stay on the sidelines. We are not near any technical levels right now, somewhat in no man's land. It's good to wait sometimes, just until price approaches one of the important zones, and then we consider setups with a high reward risk ratio.
Yeah. Okay. The reason I set it up where we split it in half a little bit is because your perspective on things and your methodology is different than Michael's, and I didn't want to get people confused by going back and forth with both methodologies. So Michael, you're up, and you're going to give us more of a perspective from your side of the coin, which is more from that Elliott wave and Fibonacci and other factors that you put into your situation. So if you could share your screen, and let's start talking turkey about what you see. And I think we've got the screen up there almost, right? There we are.
A nice 4K screen.
Yeah.
Oh, there we go. Okay. Now it's
okay. Michael, are you there?
I am.
Oh, good. Okay.
I muted at several. I muted.
Normally, at least I can hear some heavy breathing, but I didn't hear anything, and I got nervous.
The heavy breathing you shouldn't have heard because I had two mics muted.
I got you.
Okay, so where are we starting, Jim?
Well, let's start out with the S&P and give your
Okay.
perspective on what you're seeing. Yeah.
The S&P, I'm going to bring it off of there. I'm going to go to a weekly 3-year chart. On an Elliott basis, I believe that the S&P is moving higher in a primary fifth wave. And if I go all the way back out and just try to show like on a monthly maximum, you can see the buildup that we have. This fantastic rally, very nice long-term, all filled. And so the primary third wave finished in January of 2022. So initially I thought that this could have finished a much larger degree, but I had to run it until it started to break out, basically a little bit below where it did. And so that gave me confirmation that the market has a lot more to go, but it's doing it at a primary. And then it will finish that, what I consider a cycle degree third wave, but they're not done yet. So the breakdown is like, and if you're using Elliott, a primary fifth wave is going to first consist of 5 waves of intermediate degree, and those I'm labeling in the yellow. And so we've only done intermediate waves 1 and 2. And so we're still inside intermediate wave 3. Now, intermediate wave 3, if you're using Elliott, is normally the longest and the strongest wave. Now, if we consider that the degree, so as this degree gets larger, in case of it being an intermediate degree, what's inside of that? 5 waves of minor degree, of which we've completed 1 and 2. So we're in minor 3 of intermediate 3. So it just really kind of makes it even bigger, because now we're in a 3 of 3 move, which again doubles the power of what you can possibly look for. And with the degree being higher, you really start to expect. And if you're running fibs, you start throwing them on once it got back above 48.10, you started putting your longer term fibs on there, and you went to the higher levels because it had the potential to break that high. Now I'm talking about way back here when it finished and it reached its low in October of 2022. One of the calculations that I was using was, what if it went 100% more? It still could be a corrective move, but then we have to start using different levels. And that's when I pulled in 1.236 and 1.382. Well, when it flipped above 1.382, that took out anything that would signify that the market was done and was now going to decline again. And then you go to the next set, which is what I've got now showing. So if we just follow it up as the pattern continues, it's intermediate 1 and 2, minor 1 and 2, and then the next inside that minor third are 5 waves of minute. See, again, Elliott wave building blocks. So we're in an impulse move. So everything contained inside of it is also going to be in an impulse move. For example, intermediate wave 3 will consist of 5 waves of minor degree. Minor wave 3 will consist of 5 waves of minute degree. And as I got higher and higher, we realized that the 5 wave pattern just repeats and repeats and repeats as this whole thing builds. So where we are right now, I believe, is that we're in that minute fifth wave up to complete the minor third. So all that comes back and happens is we're running into the potential. And again, we're really going in a blow-off style. And there's a whole nother subject that I can throw into here that really does support what's going on. And that's, it's like if we watch the options flows, Jim, this is your backyard. If we watch the option flow and we watch how gamma gets played in and out, this move, you realize it's like, okay, well, it's just going to continue. Now, one thing I want to bring to people's attention is that, yep, here in the US, we have a holiday on Wednesday. Not, that's the federal government, and it's had nothing to do with the fact that we have this gigantic expiration coming on Friday, June the 21st. Exactly. And let me just tell you, folks, the notional value of that expiration right now, Jim, it's over $1 trillion.
Yeah, it's going to be wild.
It is going to be big.
Throw in the full moon. Throw in the full moon, and you'll have everybody.
And now we got all this stuff collectively coming together. Yeah, but if you're thinking about, I've never seen an expiration that this large. No. And what have we seen during this move and this move? An explosion in call buying. Now, call buying, sell putting, they're selling puts. So if I'm a dealer, which I used to be, guys, I was an options market maker. You're the one who's having to sell the calls to everybody and then buy the puts from people. That puts you in an extremely short position. Your hedge is you buy the underlying. So this is a self-fulfilling prophecy on one hand, right? You've got this huge move that everybody coming back in and all this money being moved back in. and going like, oh, wow, see, it must be bullish. It's like, well, when you consider what the hedge is, then it all fits. Now, what we're looking for, $1 trillion comes settled on Friday. That's going to release a whole bunch of what you would consider gamma. That's going to release a whole bunch of delta, and it's going to be delta that needs to be dealt with in the market. So here we go. Now, just to bring this down, it's still an incredible bullish move. And trust me, even after this Friday's expiration, it's not done. But my point that I'm making right now, as I come down to the 4-hour chart, now we can go inside this minute fifth, which guess what, is going to perform 5 waves of minuet degree, of which we've done 1, 2, 3, and 4. So that puts us in minuet wave 5. I'm going to bring it down again to the hourly chart. Now we're going to take a look. Now we're inside this thing. What also kind of aggravated it, because in the futures market, we had the contract roll. So I know, Jim, you talked about this before. Well, that's actually happened. So in other words, it's like you always will roll out to the next month once the volume is greater. And so you can always check that by just going, first of all, here's the NASDAQ. It's double, right? Now let's go take a look at the S&P. And in the S&P, yeah, hurry up, there you go. Look at that. See, greater volume. So traders are rolling. Traders are getting out of their June positions and moving them out to September. Now, whether that actually happens in the options, I don't think so. I think they're going to count on the 21st. That's when you'll see all of those positions settle. And then come Monday, we're going to have all that. How do we rectify that? Do we gap lower? Do we gap higher? Depends on how this all settles. So we may see on Thursday some preparation of it. And so we'll see that, there will be a strong move lower because they're preparing for this expiration, either getting out of positions. We'll see some things switch around in the stock. But if I'm looking at a stock like Broadcom,
Well, that and Oracle.
which both, do you think these CEOs are not smart? Just bring in the word artificial intelligence, which is exactly what Ellison did. Oh yeah, we're onto that game. Boom. It's exactly what Tim Cook did. And what happened right after that? Boom. Apple just roars past 200 and keeps going. Broadcom goes up $189 the day of the earnings report, and now is just continuing to soar up another 100 today. So you kind of have to ask, how long can this go on? Well, eventually things get parabolic, which in my view, they are. That's pretty parabolic to me.
Oh, it's definitely parabolic today, that's for sure.
So I'm going 1, 2, 3, 4. We're in possibly the 5th wave. And guess what? It is subdividing. So I've rerun my fibs. Now, this goes along with the intermediate degree 3rd wave. It's just going to be resistance. It is not telling me that 3rd wave is complete. What I'm looking for is the completion of this sub-minuet wave, which now projects to 5570. And gee, you would have thought down here, oh, never, not going to get there. Look what happened when we broke 5500. I'll tell you why. You know where the call wall was, Jim? 5,500. And let me just tell you, folks, it's considered to be resistance. Once it breaks, a lot of adjustments have to happen, and you just saw them. Bam, bam. Take it higher. So breaking that call wall, because they're pushing the call wall up. And guess where their next level they're going to have to push it? 5550 is being reached now. They're going up to 5600. Now, ultimately, I think once we can finish this sequence, that it's going to finish up to a minor 3rd wave. Now, so we're looking for a pullback because the market is very overbought on several different levels. Not stopping them rushing in to do it, but I think it has everything to do with Friday's expiration.
Oh, yeah.
Now, one more beyond that, the 28th is also an expiration. It's a weekly, but guess what, folks? It's the quarterly expiration.
Yeah, end of month.
So there's two things I see going on. I see that there's huge buildup, $1 trillion, and it's call heavy, very, very, very call heavy. So once those calls are off and everybody gets assigned to, they want to be long the stock, trust me, these professional traders, Citadel, all of these dealers, they're going to be like, okay, here's your stock.
And they're going to be
Because-
playing for reversion to the mean at that point.
And they are going to come back in on Monday and say, okay, we gave you your stock at whatever price,
Mhm.
and now we're selling.
Yeah. No,
And
no,
so,
that
because they
reversion to the
have
mean
all-
is what Citadel does all the time.
Right, but they have all that. If we just think about it, it's like if I'm the dealer and I'm selling you the calls and I'm buying the stock, and then suddenly I'm buying a little bit more stock, right? Because I'm also having to buy more stock because I'm now long the put, which is going to go out worthless. So I have a little bit excess on on the long side. So whatever happens, I believe that as the dealer, good, you all get your stock, and now you think, okay, I'm long the stock, say for example, NVIDIA, or you're long Broadcom, or wherever you chose. It's like, because this rally is just not going to stop. I believe it will. And then I think what happens after that is we have a pullback, and it's just going to be a minor fourth wave. And Elliott taught us way back in the beginning that a fourth wave will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. Well, here's the degrees. Minute, next one up is minor. I'm in a minor 4, coming back down. It should find its support to complete here in this window right. Oh, I don't want that one. In this window right here. And I'm going to put it on my chart again. And I'm going to add it this way, and I'm going to put it right there. And then I'm going to color it the color that I use for minor degree, which is this color. That's where I expect the pullback to come back. Whether we end up at 5,600 or 5,700, I'm expecting them to pull it back. And guess what? That's the April low, the April expiration low. Now, could they start this before expiration? They most definitely could. They most definitely could. And they could bring it.
Thursday turnaround day, Tuesday turnaround day.
Could Tuesday? I don't think so. Maybe a little bit. Because guess what else happens tomorrow, Jim? Wednesday, we're on holiday, right?
That's what I'm saying. Who wants to be exposed?
Oh, well, not just that, my friend. Vol expiration. Usually happens Wednesday morning. Can't. Market's closed. It's been shifted to Tuesday. So again,
Oh yeah, I thought they were also announcing something like jobless numbers on Wednesday or something like that. I thought I heard.
I don't think so. I think that one
Thursday
time should still come out on Thursday. Because it's still it goes there. But anyway, so I'm looking for that. Now, mind you, that's just a minor 4. Then you got a minor 5 that goes up. And then that finishes intermediate wave 3. Now, where would intermediate wave 3 come back to? The price territory of minor wave 4. Excuse me, my intermediate wave 4 going to come back to minor wave 4. Well, if that comes down to here and hangs out in this area, well, then we got another ride back down to here. So ultimately, there's your window. 62 to 63. 6,000 obviously is going to be strong resistance just because it's this gigantic round number. Something else I want you to be aware of. Guess who rolls their collar on the 28th? JP Morgan.
Huh.
We got so much going on right now in our market. And it's being interpreted as like, it's just gloriously bullish. And it's like, well, I can't deny that right now it is. But
it's all about orders because you've been a market maker and you know it's all about the order flows. Right now, the order flows are all for the bullish side.
Calls. It's all because it's calls.
Calls.
They're buying calls and they're selling. And I
And
can't begin to
and the
tell
other guy
you.
on the other side of the trade is obviously raising the offer as high as he possibly can.
Sure, sure. But you know, the other thing is it's like it's what is interesting is that if we just pay attention to the options flow and you pay attention to what's happening, are they buying calls and are they selling puts? That is such a setup where you then can go in and day trade the stock, or you could go through the options. You know, there's so many different ways to participate, and it's dependable. The one thing that the market and asset managers and all these people are, they're very dependable in what they're going to do. You know, if they start something, they ain't stopping. Now, maybe there is, maybe there isn't a bazillion dollars sitting on the sidelines waiting for the Fed to cut. And once they do, but the Fed has not signaled that they will not cut likely before December. So does that mean that they're going to sit on the sidelines until December, until they get their all green sign? And that might be, but guess what happens? I think we're done with minor 3, done with minor 4, go up and finish minor 5, finish intermediate 3, come down in intermediate wave 4. That might happen by the end of the year. What's it set it up for? This grand intermediate wave 5 rally back up to new all-time highs. And if that takes place, well, what's that do? It just puts us, you know, back into the same type of deal where we go up, we make new all-time highs, finish the whole thing, and what are we set up for? Something very ugly. So
I think it maybe what they're hoping for is they can raise the price through the roof and then lower the interest rates, and all the people in the money market will provide liquidity for all the smart people who bought their stock already.
yeah, I mean, I think it's going to be interesting. And I noticed that, can we go talk about gold?
Yeah, I was going to do that. Yeah, because we're getting tight. Yeah, so you put the gold up there and do an explanation on your feelings.
I still absolutely love gold. Have been, Jim, you and I have been doing these for a long, long time. And we're constantly talking about gold. But gold, like everything else, gets caught up in, right now, I have to tell you, because it's the dollar. And we're paying attention to the dollar. Lower dollar, they kind of love it, so they're going to move it. But right now, they're not. They're kind of bringing it in. It's nothing more than just a continuation of a correction. And that correction is just a fourth wave. And if I'm going to bring it down and quickly just go to this hourly. And so what maybe I will use that 4 hour. I don't like it all scrunched up there at the bottom. And so what's been is this bouncing around that we're getting in what I would call a box. It's just a bigger box, 2358 on the top, 2310 on the bottom. And then it could maybe squeeze and go down to 2300. But the potential here for this thing to complete is down here and possibly even down to here. And then they pick it up again. So I'm not necessarily really looking at gold as I'm still long-term. I think you have to have gold as part of your portfolio, but I actually do not make any recommendations. That's not my gig. I don't do that. But I think gold actually, even as a day trading instrument, there's a lot of money to be made. But you just have to stay open to what the market is telling you, what the price action is telling you. And right now, we had a beautiful rally, and now they're just taking it back. Let's see, we rallied up as we should. But if I look at this, 1, 2, 3, 4, we got one more leg down. Maybe it gets to there. Maybe it gets down into one of these support areas.
Well, the 50-day average is at 2309, so it might be headed to that.
Yeah, yeah.
But underneath that, you've got an air pocket. The 200 days done at 2069. So
yeah, and I think that technical traders see that. Yeah. And so I don't know if they want to go down and try to trigger that. The other one that's been causing a lot of heartache is silver. Silver's been a very, very tough market where it finally breaks, and then they spend all this time just kind of back and forth and filling and back and forth and filling and getting dangerous like this, right? Everybody got long. The market knows it. They just kill the calls. They kill the calls. They kill the market. Then it goes back up and they kill it again. And it goes back up and they'll kill it again. Ultimately, I think it has potential to come all the way back to 26. So you got a lot of coming off.
Well, your 50 days at 28.50 and your 200 days at around 24.50. So
Are you on which one, the daily?
yeah.
Yeah, there it is. Yeah, you're right. There they are.
Yeah, this is a reversion to the mean stuff, and it happens all
Absolutely.
the time.
Absolutely.
Happens
Absolutely.
and it's going to happen to the stock market at some point, like you say. So if we go up to 56, 5,700, and you're looking at that 53, 5,400 for a reversion possibility, and when would it possibly happen? It could happen right after these expirations get off the board.
Right. And I'll tell you something else that just has no clue anymore.
You'd want to have some evidence before you
Look
played
at
it. But
TLT.
that's something to keep an eye out for.
Yeah. I mean, TLT should continue to rally. And then look what they do. Gap.
Well, that seems to me like they just tried to grab everybody's stop above 93.06 or whatever, and then we'll have to see.
Very possible.
Yeah.
Very
Because look at
possible.
your bottom RSI. It looks like a double top up there,
Well, yeah, and not in a good way.
and a diversion too. A
Yeah.
new high, not a new high on the RSI.
But, the fact is, it's like when you're looking at the 30-year bond future, it's like, well, what is that doing? Going crazy.
Yeah. Well, they're trying to jump into duration all of a sudden, right?
But on the Elliott basis, I'm looking at this going like, wow, those are telling a story to me. As much as I want to continue to think that we are in a counter trend rally, and that's going to see that's the low that we made after, cut, hike. And guess where that is? October of 2023. It reaches a low. Well, it needs to do an A, a B, and a C. So I keep thinking, okay, this might be the B, and then it does this again. So is it going to be an ABC X, ABC? And so we're just going to play in this window for a while longer. And what that means is we got 125.29 on the top and 107 on the bottom. Now, I think they're going to tighten that window. But this troubles me. This one, not so much. This one troubles me because look what it did. They brought it down, then they raised it back up. And now they're selling it off again, but not with that same intensity.
No, but you get a couple of these PCEs way into the threes and heaven forbid the fours, and the entire planet is saying they're going to cut, they got to cut. It's only a matter when they're going to cut, they're going to cut. If that song ever changed to inflation's taking back off because everyone's making so much money in stocks, they're spending like crazy, then obviously that market is not positioned for any kind of talk like that.
Right.
So that's the interesting thing. I mean, you're talking about an all or none deal. The entire planet is saying the Fed is going to definitely cut. And even the ECB cut, and they apologize for cutting for the half hour after the speech. You know what I mean?
Right.
And the other thing is these guys are going to cut, and then they're hiking their inflation forecast. It's kind of like Jekyll and Hyde,
Right.
One last hit here on the dollar index, DXY.
Yeah.
But, that euro is slip sliding away, as the old song used to say, huh?
It is, but the dollar's held the same pattern for a long time. I mean, this would have been more consistent if they just continued to move lower.
Yeah.
But if not, even if I'm labeling this correctly, this is a 3, it isn't. So this has to be an A, and this is a B, and this should be a C. So if anything, it's like a 1 and a 2, and then we start really coming down hard.
It won't take that rates, it'll come down like a stone probably, because the yield advantage is one of the big reasons we have the
Exactly, you're right.
Where everybody from the foreign countries come into our country because of the stronger economy and also the stronger dollar and the higher yield. So you got a trifecta going for coming in here.
Well, I actually think it's to all of our advantages if I don't know, because I think that what it really affects is, because the euro.
Yeah.
Because the
Europe doesn't have the AI boom with all the tech stocks, so they're not going to have our growth rates.
Right. And so,
we wouldn't have our growth rates without them.
No, you're right. But anyway, I'm still, near term, midterm, We're looking for higher levels in the NASDAQ, excuse me, in the S&P and the NASDAQ for that matter.
Yeah.
But I am looking for this parabolic nature to kind of come to a conclusion. That we get this 21st of June expiration done. We see everything settle. It's going to be huge. I want to trade it, obviously.
Yeah.
You know,
But on the sell side, you have to have evidence, or else you're standing in front of a freight train, and that's a painful experience.
yeah, absolutely.
Yeah.
I agree.
All right, we're getting near the top of the hour. Daniel, can you come back in and explain what kind of a shall we say a special offer you might have for people and how they can get a hold of you?
Actually, I have something super exciting coming up. Let me share my screen. Hang on. Where is my slide set? There we go. I'm gonna share my screen. Okay. Oh boy, this one. Okay, so we do have, and this is the wrong slide. I was just setting up some follow-up meetings. There we go. We do have a super special offer available. I'm just gonna put this one up here. So we do have, you saw our dashboard that we used to find some interesting trade setups. It's called the Liquidity View Dashboard. We currently have a special on it on the annual subscription, which gives you actually 30% off. I just changed it, 30% off the regular price. For the annual subscription, it allows you to find interesting trade setups through 5,000 plus symbols within seconds. If you want to take advantage of this, guys, what you need to do, and perhaps David, you can let me just put this into the chat as well real quick. All you need to do is to go to tradingindicators.com/early-bird. And guys, the real cool thing about this is if you sign up for this Liquidity View dashboard, you will also get $150 off our upcoming masterclass on how to trade with options based on Jim's, the options professor's ideas and setups and the stuff that he's been using throughout his entire career. And this masterclass, guys, is starting actually tomorrow. So if you jump onto this special, you get $150 off this masterclass as well. Now, talking about the masterclass, as I mentioned, it starts tomorrow at 6 p.m. Eastern. It's a masterclass split into 3 live sessions. So everything is live. You can ask questions throughout. The first 2 sessions are on Tuesday and Thursday at 6 p.m. Eastern, and then the final session on Saturday at 10 a.m. Eastern. Of course, these are all recorded. So should you miss a session, no problem whatsoever. You can always rewatch them as well because they will be recorded and the recording will be sent to you. And you can also just buy or take advantage of this options masterclass outright simply by going to tradingindicators.com/options. Perhaps David, you can also quickly put this into the chat. Tradingindicators.com/options. Once again, a class led by Jim and myself this week. And we're gonna cover 3 topics and real quick. One is to how to use options to potentially turn a small account into a big one through a mix of outright calls, strangles, double spreads, and so forth. We're gonna look at put writing and how to protect yourself against losses using the caller strategy. That's it. Thanks, David.
And Michael, if you want to say a quick closing statement.
Just a quick, if you would like any information about anything that I do, including my trade room, please send me an email, Michael@MJF1Partners. It's the number 1, MJF, the number 1partners.com. I will answer your email and I will offer you a deal.
Thank you very much, both of you guys. And David, I'm sending it right back to you.